Now let's dive into our breaking story of the day, discuss everything related to the BlackRock ETF and the ETF being approved by the major asset managers around the world and where this will likely take the Bitcoin price action. Let's break this down, shall we? Bitcoin is the non-sovereign reserve currency of the digital world, and from an investment management perspective, it can uniquely and inexpensively diversify well-balanced portfolios to improve total risk-adjusted returns. However, while there have been many ways to gain exposure to crypto apex asset, there has been one glaring hole, the holy grail of access, if you will, which is the United States spot Bitcoin ETF. The road to a US spot Bitcoin ETF has been long and arduous, with the SEC rejecting all 33 applications. What a shame. Across more than a dozen filers since the Winklevoss twins first sought the approval over a decade ago. That's right, it was over 10 years ago the first application was submitted by the Winklevoss twins. However, from BlackRock with its $9 trillion in assets under management, an impeccable application track record entering the fray in June, to Grayscale's resounding court victory over the SEC, vacating its previous app denial, to the recent approvals of a levered Bitcoin futures ETF and futures Ethereum ETFs, it appears as if we are closer than ever before. Facts. Indeed, noted industry analysts now peg the chance of approval by early January to be 90%. Send it and let's go. Grayscale's discount to net asset value has narrowed from 45% at the beginning of the year to 13%, indicating a higher market implied probability of approval / conversion, and Bitcoin is up a resounding 110% year to date due to, at least in part, of the spot ETF hopes. That's what's up. So what's the big deal? You already know, fam. As outlined here, a US spot Bitcoin ETF is a massive opportunity because of the sheer size of the US capital markets. In fact, SIFMA estimates that the US accounts for a full 40% of the total global fixed income assets and equity markets cap. Moreover, ETFs in the United States represent a greater percentage of the total assets than in other jurisdictions, coming in at 7% of equity and fixed income assets versus 4% in Europe and only 2% in Asia Pacific. Now, all in all, that amounts to a 7 trillion US ETF market with multiples of the size of Europe's 1.5 trillion market and Asia Pacific's 1 trillion market. And looked at another way, assets managed by broker-dealers, banks, and RIAs in the US total nearly $50 trillion. So it would just take a tiny percentage of managed and brokerage assets migrating into a spot ETF to move the needle. And crypto adoption in the US is high, with the US ranked 4th in Chainalysis Global Crypto Adoption Index, portending well for adoption translating into investment. I mean, look at these charts. You can see the United States clearly the leader, following with Europe, followed by Asia Pacific. Another reason a US spot Bitcoin ETF is such a big deal is because of its advantages over the other trading vehicles and the resulting increased likelihood of greater adoption. So relative to spot futures, we have proxy stocks, over-the-counter trading trusts, and private funds. ETFs offer a unique and advantaged combination on fees and transaction costs, liquidity, tracking error, and operational complexity, not to mention alleviating the need to figure out custody. That's right. When you use an ETF, you don't need to self-custody. And while several Bitcoin ETFs have existed since late 2021, there are notably disadvantages to its futures-based construction, such as tracking error, tax inefficiency, manipulation, and roll costs that will typically lead to material underperformance over time, making them more appropriate for short-term trading than a buy and hold strategy that better capitalizes on the benefits Bitcoin brings to a portfolio. Put simply, a US spot Bitcoin ETF gives Bitcoin legitimacy, eliminating regulatory uncertainty, giving credence to crypto as an asset class, and ensuring strong oversight and investor protections, all in a convenient and familiar vehicle. So why doesn't Gary allow this? What's going on, Mr. Gensler? Now add in a potential offering from the likes of BlackRock with its sterling reputation among advisors and distribution to nearly every major wealth platform. It becomes easy to see why investment management and managers and advisors may suddenly take that leap. Put simply, a US spot Bitcoin ETF gives Bitcoin legitimacy. Facts. In fact, only 12% of financial advisors currently recommend Bitcoin to clients, according to the Digital Asset Council of Financial Professionals, but a full 77% say they plan to do so if and when a US spot Bitcoin ETF becomes available. And we all know the ETF will absolutely be a game changer. Now I want to read to you a tweet produced by Rip Van Winkle, which I feel is very valuable with some projections on some of the numbers where the Bitcoin price is likely to go. And then I'll be sharing with you out loud some other projections from the major asset managers. And we're going to be talking all about where this Bitcoin price is likely to go here in the short term. Here we go. Quoting him here, BlackRock, Fidelity, and other spot ETF providers will be serving up bite-sized Bitcoins to millions of investors. Here's what I mean. If the price of Bitcoin is $35,000, which it is right now per coin, when the ETFs are approved, the shares of the ETFs will not be priced anywhere near $35,000 per share. Let that sink in. And while I don't think they have disclosed how much Bitcoin each share of their ETF will be worth, a good guess is somewhere in the range of 1,000 to 100,000 sats per share. I think this is reasonable because larger chunks of Bitcoin, like 10 million sats per ETF share, would put the price at $3,500 a share, and 1 million sats would put the price per share at $350, which would still price out many retail investors. Now, how should these firms be thinking about the amount of Bitcoin represented by each share? Let's discuss it. The low end of this range is at 1,000 sats, which would price each ETF share at 35 cents at today's Bitcoin price. The high end of the range is 100,000 sats, which would price each share at 35 bucks. Now, 35 bucks per share seems reasonable for the Bitcoin IPO, but not so fast. When factoring in future price increases, 100,000 sats per share could easily price out retail investors after 1 or 2 cycle moves. For example, when Bitcoin reaches $1 million per coin, the ETF shares would be priced at 1,000 per share if each share represents 100,000 sats. And when Bitcoin hits $5 million per coin, each share would be worth $5,000. But remember, many retail investors suffer from unit bias. So when you have unit bias, 5,000 a share, even 1,000 a share will seem expensive. If their goal is to price the shares in such a way that they are appealing to retail investors for the foreseeable future, they need to put serious thought into the equation. So if the goal is to maximize inclusion and participation amongst retail investors, then the smart move might be to make the shares of their Bitcoin spot ETFs look really cheap. They could achieve this by assigning a value at the low end of the range, like 1,000 sats per share. That way, when the ETFs launch, each share will be worth 35 cents. And when Bitcoin hits $1 million or $5 million per coin, which we all know is inevitable, right fam? The shares of the ETFs will still seem affordable at only $10 a share and $50 a share, respectively. Pretty clever. So what do you think regarding this? Let me know. Now I want to share with you some other insights. The peak price of Bitcoin each and every year since 2015, it was 465 bucks. It doubled the following year in 2016, year of the halving, $977. The year preceding the halving in 2017, Bitcoin soared 20x, almost 20,000. Then the following year was a bear market. We hit 18,344, followed by another bearish year of just under 13,000, followed by the next halving year, we soared back up to 28,000, reaching a new all-time high. Then the year preceding the halving, once again, we more than doubled with a 69,000 all-time high top in November of 2021. And then in 2022, which was last year, was roughly 47,000. And this year, now year to date, is roughly 36,000. Now for the projections from the top asset managers in the world, Skybridge Capital, Anthony Scaramucci's company, projecting 150,000 to 250,000 per Bitcoin post having an ETF approval. Fundstrat projecting 150,000 per coin. Morgan Creek Capital Management projecting 150,000 as well. Standard Chartered, the primary shareholder of Standard Chartered, believe it or not, is BlackRock. They have their hands in everything. They're projecting $120,000 Bitcoin price action. Then we have Cathie Wood. By the year 2030, she's projecting as high as 1.48 million per coin. More conservatively, we can just call it a milli. We have Mike Novogratz projecting $500,000 Bitcoin. We got the billionaire investor Tim Draper projecting $250,000 next year in 2024. Again, Standard Chartered projects $120,000. We got Dan Moorhead and Pantera Capital projecting $148,000. Tom Lee projecting $180,000. Kiyosaki, I've seen his projections as high as $1 million. Adam Back actually bet some Bitcoin that the Bitcoin price is likely to reach $100,000 per coin by March 31st, 2023, expecting the halving to take place sometime in April of 2024, and the list goes on. And a little fun fact, averaging these numbers, the Bitcoin price would be around $265,000 per coin. But what are your thoughts, fam? Let me know in the comments right down below.